Hello everyone and welcome back to the channel. In today's video we will talk about how to invest in mutual funds, more like how to take strategic decisions while investing in mutual funds. And in the end I will explain to you the types of equity oriented mutual funds and balanced funds. Now let's get started. So now when we want to achieve a goal, what we do is we break down the steps necessary to achieve that goal. So while investing in mutual funds, our goal is financial gain. Now when we want to achieve this goal, we will break down the steps so that they are logical and help us in planning in detail. So now let us look at the steps required to invest in mutual funds. Now, first step you need to take is to determine what portion of your assets do you wish to invest in mutual funds. Generally, we see people investing in gold, land, fixed deposits, stock market, bonds, etc. Now all these options have their pros and cons depending upon your risk-taking capacity, income sources, etc. Now these factors have different weightage for different people. So after taking these into account, determine what percentage you want to allocate to mutual funds. Now this is the first step towards planning, and taking advice of a financial planner or advisor is also important. In the end, I would advise potential investors to first research their options at the early stage because it will provide you more clarity if you happen to be new to that area. Now the next step would be to find good mutual funds to invest in. Now in India there are more than 1,000 funds to choose from. Pick out the category you want to invest in. For example, there are categories like high risk, high return, which are essentially equity oriented mutual funds. These funds invest 100% in equity market. Moderate risk, moderate return funds, also known as balance funds, which approximately invest 60 to 70% in equity and balance in debt, which guarantees a fixed income and does not have any connections with ups and downs of the stock market. Third are low risk and low return funds, which are entirely debt funds which guarantee a fixed income and again has no connection with ups and downs of the market. Now you can choose one, mix them up and maximize your gain depending upon your liking. It is really up to you in the end. Moving on, after you have determined what percentage of assets to allocate to mutual funds and what category of funds you want to invest in, the next is to research and learn your options which are available to you. So now I will explain the types of equity oriented mutual funds and balanced funds, starting off with our first option of equity oriented funds. These funds invest 100% in equity. Moving on, I will explain several types of funds which are available under equity oriented funds and balanced funds. That is important to understand their pros and cons. We'll also talk about debt oriented funds, but that again is a whole different topic and will be taken up in another video. Now starting off with large cap funds. Now what are large cap funds? The large cap funds are funds which invest in top 100 listed companies according to their market capitalization. Now what is market capitalization? Market capitalization means number of shares of the company into share price or market value of the share. For example, Reliance has a market capitalization of more than 10 lakh crores. Now these large cap companies usually invest in blue chip companies, which means that the impact of volatility of stock market is minimal on these type of shares. They can be placed in the category of low risk and low return. One of the example of large cap fund is Axis Blue Chip Fund. Now after the 100 companies having the huge market capitalization, the next 150 companies can be placed in the mid cap category. These funds can be placed in moderate risk and moderate return category. The impact of share market volatility is higher as compared to large cap funds, which means whenever the market crashes, these stocks tend to take a higher hit. The example of mid cap fund is Axis Mid Cap Fund. After the 250 companies having large to medium cap, the balance all can be placed in small cap category. Now these stocks can be placed into high risk and high return category. Now whenever the market rises, they will provide more return, and similarly whenever the market crashes, they will take a hard hit. One example of small cap fund is SBI Small Cap Fund. Now these are the funds which invest across the board. That is, their portfolio comprises of small cap, mid cap as well as large cap stocks. Now these funds are ideal if you're just beginning your investment, as it provides a diverse portfolio and the risk is also moderate as compared to small cap funds. Now recently SEBI has also specified that minimum of 25% investment is required in each category, that is small cap, mid cap as well as large cap. Some of the example of multi-cap funds are UTI Equity Fund. So now these funds invest in specific sector, for example banking sector, IT sector, pharma sector, etc. For example, people who have invested in pharma sector during this lockdown have earned more than 40 to 50% of return. So if you're bullish about a certain sector, you can invest in these funds if the funds of these sectors are available. The example of sectorial funds are ICICI Healthcare Fund. Now these funds provide schemes specifically for retirement and education of minor children. They also take into account the requirement of children after they are mature. The lock-in period in these funds are usually long. The example of solution-oriented fund is Tata Retirement Fund. Now these funds provide us with benefit in tax planning. Investing in these funds will give you tax deduction up to Rs 1,50,000 under Section 80C. The lock-in period for this fund is usually 3 years. The example of ELSS Tax Saver Fund is Axis Long-Term Equity Fund. These are the type of funds which invest in equity as well as debt. The ratio can be 60 to 70% equity and 30 to 40% debt. In certain aggressive hybrid funds, the ratio of equity can reach up to 80 to 85%. They have the flexibility to mix up the ratio as per the market scenario. The example of balanced fund is ICICI Balance Advantage Fund. On screen, you can see the chart which summarizes the types of funds we discussed today. Also, I have given a few examples of each fund in the last column. You can screenshot this for your future reference. So these are the majority of equity oriented and balanced fund you can look into for your investment needs. In the end, I would again advise you to research your options and seek help of a financial advisor to make smart and informed choices. In the next video, we will talk about debt funds and long duration funds. Do let us know in the comment section below how you liked the video. Subscribe to the channel for more such videos in the future, and I'll see you next time.